Welcome back, guys. I'm excited to make this video for you. It's going to be packed with information. I was already recording a video, but I realized I did not have any audio input. So I had to put it in there because the video had no sound. I see my voice wicking in the orange red, so I'm going to put it down just a bit. So it's hopefully good for you guys. I was watching back my stream from yesterday, and sometimes the audio cut out. So I'm gonna get a mic because it's probably just also more satisfying for you guys to listen to me if I have that crispy sound, you know. But yeah, Bitcoin was absolutely beautiful today. We basically call every move. Um, and yeah, I saw no one talking about shorts from here. Like everyone was just watching the range high and the range low, and no one was paying attention to what was going on in here. And we actually absolutely done from there. And that's a beautiful 4% gain for me, which could have been more, but yeah, I think 4% is pretty nice. So let's just get into it. Recapping last night's stream real quick. I was telling you guys that we could actually have a trade if we take this range high and we break structure back inside. And if we do so, we can have a volume area rotation at least to that volume area low. Or I mean raise a rotation to the volume area low, my apologies. Which is exactly what happened. I wasn't awake for it. It was around my bedtime, 12 p.m. But yeah, we broke structure in here. We could have found a short in here. And yeah, we hit that volume area low slash range demand to the dollar, and we went from there and went higher. So I think I was checking price action, and maybe there was one long that we could have taken, which was when we were trying to break this downward structure up right here, but it wasn't really a good break. So your break here, which was I don't think it was a break on the three. It was a bad break. Like this is not a break you want to see, especially if you start ranging directly after a break. However, this range ended up being a reaccumulation. So we actually had in there. Yeah, so we actually had the break created, well, right after the break, we created a range, had our range low, we swept our range low, hitting that range demand, broke market structure from the top down right here, which was a bad break. I would say right around here, and then we actually had the 1 minute right there, creating the LPS of the Wyckoff Model 2 reaccumulation. My PC is a bit laggy. I'm gonna restart it after this video, so bear with me. But yeah, it's a clear Model 1 or Model 2 Wyckoff reaccumulation with the 1 tap, the 2 tap, the 3 tap, and the LPS, followed by the pump up. So you could have traded this if you were awake for it. It's mid Asia, so I'm in dreamland at this point, but it's definitely valid, and it's the RR is going to be insane. Like this is probably the best trade. Like if you took this trade, just putting your stop below that third tab, which is the valid invalidation for this long setup, you would have made like I think like 20%. Let me have a look real quick. And it's so nice to see that like these Wyckoffs, I don't see other people trade them this way. Um, and I don't see many people trade the Wyckoffs at all. Look at that prediction. That's 20.06. So yeah, you will be done for like 2 weeks of trading if you took this trade. It's nice seeing Wyckoff work. It works every single time. And it works on every time frame, which is like so amazing. So yeah, that would be my only long if I was awake for it. So for all my Asia warriors, that was your chance. And then yeah, price went up and we grabbed the liquidity from the not the range high, but the high before the range high. And this is what I want to emphasize as well on you guys is that I've been telling you ranges they rotate, but they don't have to take the extreme points every single rotation. So we have a range here, and then we come and almost hit the range low, but we don't hit it. We hit range demand, extreme range demand, and we come up and we don't hit the range high, but we hit the last high remaining before we take the range high. And don't wait for trades just on the extreme points because you're going to miss out. And also don't be scared to take trades that did not take the extreme points because they do still work and market structure is king. So I woke up around here at 8, right around here, and I saw this liquidity grab, not taking the range high, and we broke 3-minute market structure bearish right there. So market structure from the low up of the move was up, down. I'm gonna ignore this. Up, down, up, down, up, making a lower low for the first time here. So expectational order flow is a lower high for a lower low. And when do we know that lower high is most likely in? When in the market structure pool from the low up of that lower high, we actually break market structure bearish, internal market structure bearish. So zooming in on this trade, we had that 3-minute break. Let me go on the 1-minute. We actually had market structure to work with once we broke that 3-minute low, and it was up, down, up, down, up, and we broke it right around here. So when you have a break followed by an internal break, I love these setups because not only was this a break and an internal break, we also got acceptance back inside the volume area of this bigger range, where this is your starting point and this is where the break occurred. Look at that. We actually broke back inside the volume area, also losing that POC if we break that internal market structure. So this is just extra compliments that market structure is pointing down, but also from a volume area perspective, we're losing the volume area and the POC. So where is price most likely heading towards? The volume area low. So what was extra juicy on this trade for my entry is that we actually had a flip zone. So as you can see, right here, we had this 1-minute order block with imbalance. In this uptrend, every range demand, caused a higher high. So this range demand that was created, we got to tap into it and then we broke another high. So demand is creating higher highs, which is normal in an uptrend. However, we came down, we hit this demand zone, but price wasn't able to make a higher high. No, this is where sellers took over and price dumped down. This is what I call a flip, where you can clearly see price going up, but then it ends up breaking structure. So if sellers got in right here, if we get the retest, why would they let price go higher than their initial position and their entries? Most likely price is not going to get above this flip zone. And why is this good? It's because we can tighten up our stop loss that causes a better risk to reward setup. So I saw this, and when I have a break with an internal break with a retest POI that's flip zone, it's a no-brainer for me. So I actually had a limit order right here, stop above the high, and I was actually targeting this Asia liquidity, which is a 2.8% risk to reward trade. And I ended up netting only 1%. I had a 70% TP right around here, but as you guys maybe not know, is I cannot trade on Bybit anymore because I'm from Holland and they left us. They left us alone. So RIP to the Dutch residents. But I'm trading on MEXC. However, this flip and just like the stop loss size and kind of price action looked a bit different on MEXC. So I was scared to put my stop loss here in case MEXC went higher and Bybit just went lower, you know? And when you have stop loss that are 0.1%, you are entering with a big position size. So the fees are big as well. So I did not end up taking this with a 1% risk on the limit entry because I I just wanted to see what price was going to do before Mexi just like shot higher before going lower, while Bybit just went lower. However, once we got that clear move down, it was so fast. Like, look at these two candles. It was so fast that I couldn't add extra. So I had a zero point 0.7 risk on this trade, which caused the R to be around 2. And then I took a 70% TP below this low, which was which on Maxi was a 1% gain, and it should be a 1.7 or at least a 1.5 on Bybit. So kind of weird right there. I don't know why price action and like the distances were so different. But nonetheless, price went higher, which is it's allowed to do because this is all internal market structure, and that 3 minute market structure pool is actually still just a lower high for a lower low. So price is able to come all the way back up, even wick that high, and still cause a lower low. So the moment we got the rejection here, I put my stop loss to my entry, and I got stopped out on the rest here. I posted screenshots on Twitter for the confirmation if you guys want to see that. And we actually hit that range demand later on. So just following up on what happened after is that we followed that 3 minute market structure like this, and then we ended up creating ourselves a range. Let me pull it beautifully like this. So we actually ended up ranging. And the same idea that I had that price may even have a rotation all the way back down to the volume area low for this entry still applies if I'm going to look for shorts within this range. So I went to the gym around 10:30. So I did not witness this low being taken, but I don't think there was actually a good entry for me because if you have to wait for structure to break back to bullish, we actually wicked this market structure high that's lining up with the equilibrium of the range. We wicked it twice. So we wicked it once here and we wicked it twice there, creating that third tap. So there was no confirmation for me to take a long. Um, but as we can see, I was telling you guys like, yo, I'm watching for model ones at the bottom and model ones at the top. And with model ones, I mean Wyckoff model ones. Actually posted that on Twitter, and here. So I had this, posted this, and I'm like, yo, I'm watching to either break this low. But once price was here, I was making a tweet like, yo, I'm either going to watch price break this low for a simple range rotation, the same trades we always take, yeah. Or we're going to take the high, and then I'm going to watch for another short, creating a 1 tap, 2 tap, 3 tap, model 1 Wyckoff redistribution. So we ended up going higher, and we created that third tap right here. And I was telling you guys, like, yo, I'm a bit hesitant to short just because the third tap has actually 2 taps on it on the lower time frame. But if we switch to the 5 minute or the 10 minute, which is also valid, it's basically just one wick, and you don't even see that there's structure in between those two wicks. So I was kind of hesitant. I was not sure. However, what created itself was beautiful. So if we look closely, we actually had 2 minute supply up here. We actually had 2 minute supply up there. And as we can see, the third tap of this Wyckoff Model 1 redistribution had its own Model 2 distribution, where you have the 1 tap, you have the 2 tap, and you have the 3 tap right here. It's Wyckoff within Wyckoff, which happens all the time. Wyckoff within Wyckoff happens all the time. Followed by this very, very aggressive break. So this is a clear sign that this Wyckoff is going to work. And now we have to find a short entry. So just to add extra confluence, this break was also back inside the volume area below the POC, which is nice. And yeah, the volume area low is pretty close. However, there's nothing here to stop price from a demand a potential bounce. We had this 1 minute OBYM that actually gave us this tiny move up. However, what happened? So once we broke this, I was like, okay, let's find a short, you know. But I couldn't short right at this break because my stop had to go above this high, and the objective or the technical target of this YCOP is actually the range low, which is only a 1.5 R, and I like to aim at least for 2.5 plus. Okay. Um, and what happened was we got this immediate retesting this break of structure level and not really this range supply. And I was actually too late to enter on this immediate candle. So I was just being patient. I could have missed the move, but so be it. However, once I saw price like dying off right here, I actually made a post, which is also on my Twitter, where I made a drawing that I wanted the price to come up, hit that supply zone, and then just dump from there. And this is where my experience comes into play because I have seen it multiple times where we have a Model 1 Wyckoff redistribution that has an aggressive break. After the break, it's like slowly dying, falling off a cliff. Like it's slowly grinding down. Leaving, which is a very important part, leaving good looking supply above. And the way I interpret this and what I think the market makers think in this point is like we had this aggressive break, but we don't have like that much power yet to immediately dump. And ignore that sound. Okay. Um, and what I know from experience is if we have this and we have that good looking supply above us remaining, oftentimes price comes up pretty fast into it and then just dumps, which is like the final entry for Mr. Market Maker to dump price down, or whoever this big player was. So yeah, that's just like kind of experience. We had that break, we slowly had that grind down, and I was literally I drew it before it happened. Like, yo, I think we're gonna come into the supply and then dump. Limit order, stop loss, and this was an absolute banger. Stop loss of 0.15%. First objective is the low, which is a 3RR. And then I told you guys, yo, it can come down to this range demand, which was also the volume area low of the bigger range. So I was also watching this big volume area. So this support. And let's make it green because I'm like that. Okay. Which was literally the end of but this was my final TP. This was my final target. And we ended up absolutely dumping down, which of course I did not expect once I entered here. But it's absolutely nice to see. Like if you held on to this trade, you would have made 12%, which is insane. So maybe that's something I can improve on is like just leaving that 20% of the trade running, you know. But at the same time, you cannot complain if you make 4%, 3% in the trade because on now 3 or 4% in the trade. You only need 1% a day, which is what I have been saying, and which I'm gonna say every single day, because consistency is just key in this trading game. So yeah, we had the first short which was a break of structure with an internal break and a flip, targeting that Asia liquidity and that first demand, hit the 70% TP and then got stopped out on the rest. But the idea of having a possible full-on rotation to the volume area low of this bigger range was still valid, but price just needed to trap some more people first before dumping down. So we had that Model 1 redistribution here. And by the way, for the people that don't know, if you're in a downtrend and you have a distribution, it's called a redistribution. If you're in an uptrend and you have a distribution, it's just called a distribution. Same for accumulations and reaccumulations. So prices absolutely dumped down from that Model 1 redistribution where we got the retest, which was so nice. And you want Model 1s to be aggressive. That's typical for a Model 1. So absolute beauty of the trade. Bitcoin, like that's it, done. And all the people that waited for the extreme points, well, they had no trades today. And even when this extreme point got hit, you got a fake break back inside, and then we just dumped down. So well, no trade confirmations here because you guys know I like my breaks to be more aggressive and then also get back inside the volume area, and we're just not anywhere close towards that volume area low. So that was Bitcoin. And I went to the gym. I actually came prepared for you guys. I went to the gym and I came back and I realized that I absolutely missed a beauty of a trade on gold. So gold, like I'm not even gonna go over the higher time frame analysis because as you guys should know, if you trade gold, gold is just in a massive fucking uptrend. And actually we just um we just had a massive sell. Holy shit. We had a massive sell event. Okay. Well, what happened right here, ignoring everything that happened prior. Okay, that looks clean. I was like, okay, we're in an uptrend, right? But I don't think the break is that. Um, I don't think the break in this uptrend is that special, especially if you have a break of your market structure pool that's making a higher low and higher high, and right after the break, you just start a range. Like if you want market structure to continue aggressively, you want to have those V shapes, bam, 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 and not the more spread out market structure that looks like this. It can still work though, but I was like, okay, we're in the uptrend, but we have started to create a range here, and what actually ended up happening? Oh boy, I think alts are bleeding. Okay, but what ended up happening is we got a range. The range was confirmed already from this high to this low, and we already had a sweep of the initial range high. And a sweep doesn't have to be a wick. No, a sweep is just we have to go above the range, not too high, and then come back inside. So we already had a sweep of the range high, so we can already extend our range high right here, putting these two dots here to tell myself, yo, we have a one tap and we have a sweep of the high, which is our two tap. And then what happened is we came pretty close to the range high right here. So maybe you could have thought that this was going to be a Model 2 distribution where the third tap is lower. However, there are two key aspects of a third tap for a potential third tap accumulation or distribution. A third tap either grabs all the liquidity except the liquidity from the second tap, because a Model 2 needs to have a third tap that's lower than the second tap, or it hits the last supply remaining. So on a Bitcoin trade from yesterday, we had a Model 2 Wyckoff distribution. If you don't know what I'm talking about, go back to my previous video. We had a Wyckoff Model 2 distribution, and that third tap hit that last supply remaining before taking the second tap high. So what did this high do? It grabbed liquidity from this high, but we still have internal liquidity from this high. Besides that, you had no market structure to confirm an entry here. The market structure low of this up move was like around here, which is not going to give you a trade. What did guys doing? We came back up, waking that internal liquidity. Yeah. So now I'm like, if we break structure right now, this can be a Model 2 Wyckoff distribution, because if it's going to be a Model 2, yeah, it shouldn't take that high, and Model 2 likes to either grab all the liquidity or hit the last supply remaining, or even both. It can be both. So if we follow structure from that low up towards that liquidity grab that we had up, down, up for a higher high, and breaking structure right here. I've said here, BOS, break of structure. And this is even like these are high probability setups, and I need to slow down before I get too excited explaining it. But if you look at what created itself once we broke structure, so we broke structure on this candle right here, indicating like yo, this is the model two is confirmed. You know, this high is protected because the high took out the low, it did its job, and we're gonna look for a lower high for a lower low now. What created itself was once when we wicked that high, we created a 1 minute order block with imbalance. And we already mitigated that, creating another order block with imbalance. You see this little supply that created supply. So supply created supply. I can tell you, which is like a secret tip of mine, is that if you have two order blocks on the same time frame that look like this, where the first order block created basically the second order block, the tap of that second order block, it's very, very strong. See it as someone filled a big position here and they pushed price down and then price came up and they filled even more positions and pushed price back down again. So once you come up towards where they filled their positions, they're going to push price down even further. I can tell you if you have an order block that created an order block, that second time, so the second one, gives a very strong rejection. So we had a break and we had the mitigation. And now we have to wonder, okay, there is no more reason for price to come higher. No more reason. And this is the difference between a normal Wyckoff Model 2 distribution and a high probability Wyckoff Model 2 distribution. So if we have a normal Wyckoff Model 2 distribution, let's say it looks like this, with our 1 tap, our 2 tap, our 3 tap. If it's a normal one, within this third tab, you just have a break back inside the volume area. There's not that much liquidity below, nothing special. There is some supply remaining here that's still left. But hey, market structure broke bearish here. So I'm still going to give it a shot, you know? That's just a normal Wyckoff Model 2 distribution that can work, but I would not call it a high probability. No. In this range, we grabbed all the liquidity except the range high. We broke structure, confirming that price should not come above this high again. While breaking that low, creating that break of structure, on the retest, once you mitigate this order block with imbalance, that second one that created itself, there's also no more reason to come higher for the retest and then come lower because the last supply has been mitigated. So there's no, once you mitigate this one, there's no supply remaining above you. There's no liquidity remaining above you. While there is a beautiful return to zone below you. So from a liquidity perspective and a market structure perspective, everything is pointing down. There's no more supply above. All the demand is below. All the liquidity is below. That's when a Wyckoff Model 2 distribution turns into a high probability Wyckoff Model 2 distribution. If you had just a break and you didn't have this return to zone and you didn't have that juicy looking retest, you can still try it. It's still a valid trade, yeah? Because if I pull my volume area for confluence, look at that. Look at that. Losing the volume area high, breaking structure, and having a perfect backtest. Like those three factors, losing the volume area high while breaking structure, having a good looking retest zone, in this case, the supply created supply, plus having a good looking return to zone below you, so all the liquidity is below you. If you have those three factors in your Wyckoff Model 2 distribution, it changes from being a normal Wyckoff Model 2 distribution short trade to a high probability short trade, where you can literally double down on your risk. So note this down and remember it. because these are trades where you can just bag 10% and you're done. You're done. You have your prop firm challenge in one trade, because from a risk to reward perspective, the same way I had a limit order on that supply created supply on that supply for the Bitcoin trade, you could have one right here, and this is a 5.5 RR. That's simple. So if I saw this, I would have doubled down on my risk and taken the trade. Just left it. I was driving back home. But yeah, long story short, beautiful, absolutely beautiful, and we know that market structure is still pointing up, right? So this Wyckoff Model 2 distribution, the objective could just be to grab more liquidity for higher, because we can still maintain this pool. This happens all the time. Like this Model 2 distribution was just to grab liquidity and go higher. However, we just actually missed my POI for the long, and it took up without me. So that was the short I was talking about. Absolutely beautiful. I think we've spent enough time on that short and emphasizing on how good it was. Um, but yeah, those were the two main trades. And then lastly, we have Solana. Um, and as I tell you guys, if you don't have a short on Bitcoin, but you know it's going to go down, but you just couldn't get an entry on it, let's try to find a short on like a Solana or a Matic. I like Solana and Matic to trade. But what we had here was almost the same vibe as gold. We had a Model 1 that went over in a Model 2, which happens all the time. Model 1s can go over in Model 2s. And what did that third tap do again? What did this third tap do? Of course, it grabbed all the liquidity except the high, because the third tap should not take the high, otherwise it's not a third or a Model 2 Wyckoff anymore. So this third tap took all the liquidity. We had a break back inside the volume area, having a retest POI zone of range supply and the volume area high. I already have my short trades on Bitcoin, so I did not take a short trade on Solana, because it's basically doubling down on your short idea risk. Because if Bitcoin is going to go up, Solana is going to go up as well. So that's why I didn't take it. But let's say you have no trade on Bitcoin, that's when you can try and catch that Solana trade. But I want you guys to realize this is the exact same setup as Bitcoin and as gold, mostly as gold this time. Again, it's a Model 2 distribution where the third tab grabbed all the liquidity, and we had a break confirming that this high is in, and we had that break also back inside the volume area, and we had the retest, and again we had that liquidity below, so we grabbed all the liquidity above, and now all the liquidity is below us. So where is price mostly likely heading to next? That liquidity below us. It's the exact same setup, the exact same. And again, if you took this trade on the retest, let's say you average an entry around here, and your stop had to go above that high, what is the technical target of the Wyckoff? It's this low. It's a 2.88% RR trade. You only need 1% a day. You have to really realize that you only need 1% a day to be profitable long term. Because if you make 1% a day, that's 5% a week. If you start with 1,000 euros or dollars into your trading account and you make 5% a week, you calculate how much you have after 1 to 2 years. Trust me, you will be flabbergasted. And you can just wait for setups like these to occur, these high probability Wyckoff plays with break back inside the range and volume area. Because that's all I'm doing. I'm not doing anything that's like crazy complicated with like time, quarterly theories, and all those other things that exist out there. No, Wyckoff, liquidity, and market structure and supply and demand all combined in one setup. Let's just call this a setup. I call it a setup. I have it noted down as like 1D and 1B in my Excel sheet if I journal my trades. Um, so yeah, we came down and we grabbed all the liquidity and we just had a fake break to grab more liquidity above here, hit supply and go lower because if you have a Wyckoff at the top that's looking like this, yeah, it took a very long time to play out. Like Mr. Market Maker could have filled their positions on this sweep and then on this sweep and then on this sweep, and they push price down, probably filled more here, and then absolutely nuked it. So watch out playing and trading simple 1 minute breaks back inside the volume area on the low time frames if you have a big Wyckoff at the top, because it can just be a manipulated break to hit supply and then go lower. So that was a good trade you could have taken on Solana, and then look what happened. We were trending down. Okay, so Solana was trending down, as I've shown right here. If you're trending down and the whole market is trending down, and you create a range, and you expect the price to go lower, well, then the range is probably going to be a redistribution, right? That only makes sense. Price cannot trend forever. You cannot just trend all the time. You need more sellers and buyers. If price was trending all the time, who would still buy these pullbacks? Like no one, right? Everyone would just wait to sell, and there will be no people to buy, or no people to buy your sell orders. So price needs to range after trending for long to create more buyers and sellers before pushing price down, where the range is most likely a Wyckoff redistribution. What happened? Let's analyze it. We had a range, we went up, and instead of putting in a lower high for a lower low, it actually came back up and swept this high, indicating that we're probably going to range before continuing this lower high for this lower low play. Swept the high. Well, here we have our range. Okay. What are the most simple trades that I always emphasize? A simple range deviation with a break back inside. That's it. And that's also exactly what we had here. And then preferably also back inside the volume area. Well, look at this. The volume area is pretty divided. And the break is actually already at the volume area low, because like on low time frames you cannot always use the volume area because it's so tight. But what looks like special here, or not even special, what is yeah, do you see anything special in here that we just talked about? Well, I hope you do, because I thought I was pretty I put a lot of emphasis on supply that creates supply. Everyone right here again on the same time frame, a 1 minute OBM create a 1 minute OBM. And what did I tell you guys? The second time this OBM, the second created OBM, is oftentimes very strong. What do we have here is we swept the range high and we broke market structure. So now we can look for a retest to take a short position all the way to the range low. And this POI is extra juicy because we have that OBM created that OBM. So you can short it here and you can put your stop loss above that high and you can target the low. And look at that, a 4.6 RR. I did not take this one. I was just chilling. It was Friday. I hit my weekly goal, made nice percentages, and wasn't paying attention to Sol. But I just saw it when I was preparing for this YouTube live stream. I'm not gonna take or say I took a trade that I didn't take. So I also didn't post about this one on Twitter. I did post about the others. So but just it's so lovely to see it work, you know? And especially this little OBM that created OBM, like those are so effective backed by market structure. And then look at this. Look actually what happened. Look what happened. So price had a low, a range low and a range high. And we wicked that high. Yeah, we wicked that high right here. And then we came all the way back down and we wicked the low, indicating that there can be a Wyckoff on both sides of the table. Well, look at this. You have your initial range low and you have your second tap, and here's your third tap. What did this third tab do? Have all the liquidity besides the second tab liquidity, because it shouldn't do that if it's going to be a model 2. Look at that. It grabbed all liquidity besides the lowest, besides the low of the second tab, and then it went up, not hitting its target, because what ended up happening is it went over in a model 2 distribution instead of a model 2 accumulation. It happens all the time. Wyckoffs go over in other Wyckoffs. So this accumulation, this model 2 accumulation, went over in this model 2 distribution that did end up hitting its target. And look, what did this third tab do of this model 2 redistribution? It grabbed all the liquidity, but range high, the second tab, which it shouldn't do if it's going to be a model 2. However, there was no confirmation here. Let's say this was a good market structure pool and then a pull up, you can enter on the break if the RR is worth it. But yeah, it's just lovely to see it work. So that was kind of it. I think it's 40 minutes. It's a bit longer. I want to keep it normally between 20 and 30 minutes, but I think it was very valuable that I put some good emphasis on when it becomes a higher probability trade. So having that, there's no reason to go higher from a liquidity and supply perspective, while having that return to zone below us, while having that confluence with the breakup structure is very key for a setup to become to go from normal and good to very high probability. Like once you have something like this on gold, you can double down on your risk and you can make 10% in a trade. So yeah, maybe if it was a bit too much to process all at once, take a break, listen to it tomorrow again. And yeah, if you guys like appreciate the videos, like just sub on my channel, because last video actually got 50 views, which is crazy because I only have 20 subscribers, you know. But I love every single one of you guys. And yeah, let's keep killing it. Let's keep killing it. It's Friday right now, so take tonight as a breather from all the trading from the week if you had a pretty busy week. However, if you did not hit your weekly goals or you messed up on certain trades, the weekend is not to chill. No, 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 no. The weekend is to chill if you did everything good. Okay? And even then, you can still put in work. I'm going to put in work at least. But use the weekend to backtest your strategy even more, to become more experienced with the market and more experienced with your edge in the market. Watch some of my videos. Go over the price action while following my live tweets to see my exact thought process. Or go over a whole day of trading while then looking back to my stream and seeing what I looked at. Okay? And I want you guys also to really focus on one style of trading that suits you. If my style of trading does not suit you, that's totally fine. Don't watch my videos. Go to someone else that explains your preferred style of trading. Don't try and use indicators and then watch my market structure and Wyckoff videos. Like maybe you can combine it, but I think it's better if you really focus on one style of trading and master it, and also ignore the noise, ignore the rest. I'm not saying one style of trading is better than the other. There's no style that's better than the other style. If it works for you, it works for you. But don't try and take everything in and try to mix it and combine it. No, you don't have to. Follow someone which style of trading you like, and maybe it's me because you're watching my video till this late. And then try and master that style of trading by following someone that has more experience in it than you. So really let that sink in, and maybe that also means putting your ego aside and realizing what I've been doing so far, mixing indicators with this is not working. It's not working. Self analyzing is one of the most important things in trading and to make it. I was realizing that when I used market cipher as an indicator, I wasn't profitable. When I tried exo charts, I wasn't profitable. Instead of trying to make it work, I just quit it. I tried to make it work for 6+ months. If something doesn't work for you at all after 6+ months of working on it, it doesn't work for you. Leave it and do not look at it anymore. I have market cipher. I just don't use it anymore. I don't even want to have it on my chart because even if you have it on your chart, the urge to press on it and just to look at it real quick and then skip your market structure confirmations and try to short a div or a divergence whatsoever, it's going to slow your progress in the other style. So that's a quick tip at the end of this video. I love you guys and peace.